Today I'm chatting with Keith Neumeyer from First Majestic. In this interview, we discuss inflation, where it might be heading. We discuss the Fed and the Bank of Canada and how they may be positioning themselves in terms of interest rate policy. And we also discuss what's happening in the silver market right now, and Keith shares his thoughts on a potential silver shortage. And I sneak in a couple questions about First Majestic there at the end. All right, everybody, enjoy the interview. Keith, thanks so much for joining us today.
Well, it's been a while, Steve. Nice seeing you again.
Likewise. So let's start with the Bank of Canada's announcement yesterday. They opted for a 50 basis point increase. I think most economists and analysts were expecting 75. The U.S. is still expected to move forward with the 75 basis hike on November 2nd. What do you think the Bank of Canada was thinking?
Well, I think that, like the UK, I think they're seeing that the economy is rolling over. I've heard that house prices in Toronto are down 30%, at least a headline I saw last week. And I don't know about Vancouver, but I can tell you with mortgage rates the way they are now, I'm sure the entire real estate market is about to freeze up.
But in terms of just going in a different direction than the Fed, do you think that Canada is choosing housing over battling inflation?
Well, I'm not sure if the Bank of Canada is that smart, and I'm surprised at what they did. Consensus is 0.75 of a point in the United States, and I would assume that Canada would just follow suit. Maybe this is telegraphing the fact that the Fed's only going to go 0.5 versus 0.75.
Yeah, we've had some conversations about that with some of the people that we've chatted with that have worked at the Fed, and they've actually said that the Bank of Canada definitely has communications with the Fed.
For sure, they all talk. They all act together.
So I assume that you're actively following the inflation prints down in the States, the CPI numbers. What do you think is going to happen here in terms of the next year? We're going to start to see energy prices probably roll over, but then again, we're going to be post midterm elections. We got the SPR, the Special Petroleum Reserve, that Biden has been very aggressive to use to keep down energy prices. Where do you see inflation heading into 2023?
I don't think the Fed is going to be that successful in controlling inflation. I think, inflation is being caused by bottlenecks in the supply chain. And it's a lot different than in the 70s where, the inflation was, caused by the economy. The economy just got heated up and got out of control. And, you had the baby boomers all coming into the market at the same time. I'm a baby boomer, so I had 3 jobs in the 70s, and it was great times. The economy was just absolutely ripping and roaring. And today, we're going into a recession, and you've got the Fed raising rates in a recession, which in itself makes no sense. But nevertheless, they're trying to destroy the economy. They're trying to bring inflation down. I think they're going to fail because the supply chain is not fixed. A lot of the manufacturing sector, can't get jobs. There's ships out in the harbors that can't get unloaded. Look at all the LNG ships that are sitting off of the coast of Germany that are trying to be unloaded, and there's no infrastructure in there to unload these ships. So people just don't want to go back to work. The government made huge errors in giving out free money. And a lot of these people who just got used to free money and got used to staying at home and not going into the office, not going into work. And I've got young kids myself in their 20s or late 20s, and I talk to them about this exact fact. And it's easier for them to stay at home and get money from the government, and to work 2-3 days a week and kind of relax a little bit, and then they get supplemented by government. I call it welfare. I'm not even sure what they call it, but I personally would call it welfare. And I think it's quite disgusting the way, the millennials just are refusing to work. And it's affecting the economy right through.
We've got all these trends right now, like quiet quiet quitting, and then there's quiet firing, and all that sort of stuff. Do you think that there's problems right now with young people just and perhaps it's, you know, symptomatic of the gig economy, but where young people just they get jobs and they're generally not going to be there in 6 months because there's always either something, you know, better, or there's some sort of issue with where they're working that they just like it feels like young people today just they are really quick to leave jobs, and it wasn't like that even when I was younger, say 15 years ago.
Yeah, I think the baby boomers made a bit of a mistake. You know, like my parents and most people of my age grew up in, you know, fairly modest situations, you know, where, you know, we witnessed our parents, you know, working 9 to 5 and really scraping for every dollar they could bring home. And, you know, they really struggled, you know, to bring up the family and so on. And, you know, they set a really good groundwork for the baby boomers on what work meant. And then the baby boomers ended up, you know, making a lot of money over their, you know, primary working years. And we spoiled our children, and our children grew up in relatively good situations where everything was handed to them. And now all these young people are now coming to market, and they're lazy for the most part. Now, of course, you know, we shouldn't generalize, because, you know, there are some very good people that are doing great things out there. But I mean, just from a general perspective, you know, this age group it's quite shocking that you know, they just sit there and expect everything to be handed to them.
All right, so let's talk silver. What's happening right now in the physical markets versus the paper markets?
Well, just yesterday I read that the LME is down to like 35 million ounces of silver, and you know, that's pretty shocking. I've never seen that low of a number before, because normally it's in the, you know, 100 to 150 million, in that range. It's kind of been in that range for probably 20 years. And for it to break through 100 and now down, if those numbers are correct, that's pretty silly numbers. But, you know, look, we are going into a worldwide recession. That's clear. You know, the central banks of the world seem to want to crush this market, crush the economy for the, absolutely wrong reasons. We can talk about the World Economic Forum and all the stuff that's going on there and why they're doing what they're doing. But nevertheless, they are doing it. And, it's sucking down commodities. And you've seen oil come off 140. It's now, in the mid 80s. You've seen copper come down. You've seen lead, zinc. You've seen silver. Everything's being sold off. I think corn is probably the only interesting looking commodity right now. They're all down, and this is likely going to continue for at least a few more quarters. I hate to say it, but at silver at 1950, it's a stupid price. Supply demand fundamentals for silver can't be better. We've got two industries like the automotive sector, who's consuming something like 80 million ounces of silver this year, and then the solar panel sector is consuming something in the order of 160 million ounces of silver. That's two industries right there that are consuming almost 30% of the world's supply. The miners are only producing about 850 million ounces of silver this year, approximately. And you got two buyers taking up a lot of that silver. That's pretty nutty. And with prices the way they are, it's silly. But we don't fix the price. The miners have no control over their silver price, despite the fact that I'd love to have control over it. It's the big hedge funds, it's the big banks who set price, and they think there's a recession coming, so they short silver.
I assume you spent quite a bit of time studying the history of the price of silver. What's in your view the macro environment that silver bull markets tend to favor?
Well, you need gold to move. Okay. It shouldn't have to move, but because I don't look at gold and silver as the same, but the market looks at gold and silver as the same. So despite what we think, the market's bigger than how you and I think. Maybe one day silver and gold will decouple. Who knows, right? We've seen cobalt, we've seen platinum and palladium and nickel most recently. All kind of break away from their historic trends, and due to paper market shenanigans and short positions and squeezes and things like that. So that could happen in silver. We saw the glimpse of a short squeeze, about a year ago, the Reddit crowd and so on and so forth, but it didn't last very long. That could happen again because The physical market is extremely tight. You try to buy, just to give you an example, our website, we sell silver off of our website, as you likely know. And this year, we're twice our volumes of last year right now, and we're making $4 on spot, on top the spot on those sales, and it's embarrassing to get $4 over spot, but everyone else is getting $5 or $6 over spot. So we don't want to give the silver away, but at the same time, it's just nutty out there, because there's just all the mints are at the end of their wits. The mints cannot produce any more ounces. The bottleneck is not so much in the refining, but it's in the mints. And it's an interesting market, not something I've seen before.
What do you think are big catalysts for precious metals over the coming, say, 2 years? Do you think that we could see a Fed pivot? Do you think that we could see, say, China and Russia come out and back some sort of commodity-backed currency, or some funny things happening over on the LME? What do you think could ultimately move the price of silver over the next couple of years?
Well, I think there's three potential catalysts. The paper market could run into trouble, and we all know that. We've been talking about that for over a decade, and COMEX, LME, or whatever the case may be, and with the inventories down to the levels that they're down at, maybe that's pointing at a potential problem. But you're dealing with some pretty big, powerful banks that know how to fix things pretty well. So even though there's a possibility of the paper market breaking, I wouldn't count on it, but it's always possible. The other thing is we could see headline coming up and saying, hey, look, Tesla, Apple, Samsung, can't produce their products because they can't get any silver. And the second, the word silver shows up in a headline, because you see lithium, you see nickel, you see copper, you see these metals showing up on headlines now and then, talking about the new Green Deal, or, going green, or, whatever. But you never see silver being mentioned in headlines when it comes to the whole green energy story or supply demand fundamentals of the metal, right? As a result of electric cars and solar panels and computers and all the technologies that we rely on, which are huge consumers of silver. There's a real disconnect between the knowledge of the public and what silver is. And if Reuters or Bloomberg actually came out with a story saying, hey, look, this is a serious issue, we may not be able to produce these products because we just simply don't have enough silver, then that's going to light up a bunch of hedge funds and get people excited. That could happen. And that's real. And because that is actually happening in front of our eyes, where we're running into huge supply problems in the silver industry. And no one's talking about it. And of course, the third thing that could happen is gold. Once the Fed, once the market realizes, okay, the Fed is done, we're now at 4% or whatever that you name the number, it doesn't really matter what the number is, and we're not going to raise any more, or they may pivot and then start to reduce. I'm not expecting that anytime soon, but just the fact that they stop raising rates will be enough to get the hedge funds start to coming into the gold sector again. And once that happens, silver will also move with gold.
Okay, let's talk about First Majestic. So you guys produced a record 8.8 million silver equivalent ounces in Q3.
Yeah.
What's the key driver behind this this production? Is it just the fact that you're able to sell it for so much, or is this just something you guys have been working to, as sort of the last 5-year plan type thing?
Yeah, well, we started investing pretty heavily a couple of years ago. When the metal prices started to look pretty good. Back in 2015 or 2014, 2015, things were pretty bad in the mining sector. We had I forget now. $1,100 gold and $14, actually $12 to $14 silver, and it was pretty tough to make money at those kinds of prices. So we really curtailed our investment. But come 2018, 2019, when the metals smartened up and started to look a little bit better, we started to invest quite a lot of money into mill expansions, mining development, underground development to get access to ore, and of course exploration. We have record exploration. We have 300,000 meters of exploration going on right now. We've got 30 drill rigs active in the business, and we're spending records amount of money on development as well, and also the mills, as I said. So this is all translating into higher production, and next year is even going to be better.
Okay, so in August, you guys published your 2021 sustainability report. Why is this important for you guys?
Well, the mining sector doesn't do a very good job patting itself on the back. The mining sector created ESG. We didn't call it ESG. We called it CSR, community social responsibility. And, I remember the first soccer team I sponsored back in 1994, I guess it was, in Africa. And, these are community efforts that we do. And, if it wasn't for us, a lot of these towns wouldn't have electricity, they wouldn't have water, they wouldn't have schools, they wouldn't have, central stores. There would be nothing. There'd be basically ghost towns. And we, since ESG has become a fairly important element, for investors, institutional investors around the world, the mining sector has now started to produce these annual reports called, ESG reports. And it's our second one, something we're very proud of. And, but it's things that we've been doing for over a decade. And, now, we're getting this information out to the public because, there's a demand for it.
So for investors watching, what's the rest of the year look like for First Majestic? Are there any sort of events or timelines they should be watching?
Well, Q4 is going to be a pretty good quarter. Jerritt Canyon is finally getting turned around. Jerritt Canyon's been in our portfolio for a little over a year now, I guess about a year and a half. And it's been a little bit of a high cost producer just because of the amount of money we're investing there. And the way the accounting systems work, we have to charge our investments against the ounces we're producing. So, we have an elevated cash cost or all-in sustaining cost per ounce of gold at Jerritt Canyon, which is a lot of that investment is going to disappear because also at the same time, the production will increase. So, you're on a per ounce basis, your costs drop because you're producing more ounces. And so this year we'll produce about 110,000 ounces of gold. Next year, we'll produce about 135,000 ounces of gold at Jerritt Canyon. Santa Elena is, going to be in the 10 million ounce range, which is around or slightly more than this year. San Dimas will be pretty much the same in Lincoln Tata. So, there's growth coming, but a lot of it's Jerritt Canyon related, which is our new mine in Nevada.
Hey, well, Keith, thanks so much for hopping on here today and chatting with us. It's always a huge treat when you come on here. Our audience loves your commentary, and I wish you the best of the year here as we just entered Q4, and hopefully you'll hop back on as we start to see some volatility here, which I'm sure we're going to, as the Fed starts to end this rate hike cycle.
Yeah, well, I think we're going to see, that occur. Probably, Q1 might be a little bit of a challenging quarter, but I think, by Q2, Q3, I think we're going to be out of the woods. And I think, 2023 is going to be pretty interesting years for the metal prices. I wouldn't be surprised to see, north of $2,000 gold and north of $30 silver in 2023.
Awesome. Thanks so much, Keith.
Okay, great, Steve. Good seeing you again.
All right, everybody. Thank you so much for watching. And if you could do us a big favor, please hit the like button, subscribe, and ring that notification bell so we keep making more of this content for y'all.